So, Derek, if you are the real Derek, turn your camera on, say hello, let us know you are here.
Hello, my camera is on. Can you hear me? Can you see me?
We can
Do I
hear
look
you.
real?
We can see you. You look real. You look good. We're glad
Okay,
you're here.
awesome. Brian, just so you know, I don't know how that ever happened. We've got a lot of extra Derek's on this, but I'm happy to have all the Derek support. So, Brian, I don't think that I'm able to mute and turn off cameras. So if you can keep an eye on that, if anybody does join, they're going to automatically show up as me if they have that link, and their camera's going to be on and their microphone's going to be unmuted. So keep an eye on that and try to make sure that we've got as much background noise limited as possible.
What could be worse than one Derek Boer? Several Derek Boers, but here we go. We're going to make that happen anyway. So, again, thank you for joining us here today. It is January 14th. We're going to hit on six predictions for 2026. Yes, we're already 2 weeks into the year. Yes, we've got some insider information, but things change quickly in our industry. So we want to set some expectations here, kind of talk about where we've been, where we're going, and probably where we expect to be in the next couple of years in the insurance world. And then more importantly, of course, who cares about what the predictions are? But more importantly, how do we create a winning insurance plan in the current insurance environment? So you, of course, have several Derek Boers here, one Brian Boer here, and we're going to do our best to bring this thing home. Now, topics today for our insurance webcast, roof coverage. We've been hitting on this for several years. It's still a thing. It's still changing, but we're seeing some clarity about how that's going to play out. We're going to touch on that briefly. Gray area claims. You are seeing a lot of change in claim practices. You're seeing a lot of gray areas that are being introduced in the insurance industry. What do we need to know when it comes to filing claims in 2026? Third, liability coverage. It's getting harder to obtain. It's more important than ever, but it's getting harder to obtain and more expensive. Why is that happening and what do we do about it? Number four, automation and technology. Surprise, surprise, right? Of course, we're seeing more and more of that being embedded within the insurance world and in new ways, which we're going to touch on briefly here as well. And then rates. Everyone's here for that, right? Number five, what are insurance rates going to be like? Well, good news for the most part. We're seeing rates really stabilize. We've seen that maybe the tail end of Q4, and we're seeing that in Q1. We expect that to play out not just for 2026, but probably in the coming years as well. So we're optimistic about where the insurance industry is at and where it's also going to be going. And
Now,
then
Brian, you know that this is being recorded and people can come back and see this information, right?
that is true. Yes,
Okay,
and
all right. So that's like you put it in writing, I guess.
I am comfortable with my foot in my mouth. I do that several times a day, but I'm willing to throw it out there anyway and give my best. So finally, we'll bring it home with just what's kind of happening in the industry. You see this a little bit. We'll only touch just for a minute or two on what's happening with insurance agencies because that does have an impact on consumers and on the industry. So, Derek, I'm going to kick it over to you here to hit on roof coverage, right? We've talked about this several years in a row. Just give us a quick recap about what has happened, but then also what we're seeing here in 2026 when it comes to roofs.
Yeah, absolutely. And while I'm doing this, if you can take a quick look at the participants and mute or turn cameras off for anybody that
Sure.
has signed in as Derek Boer. Uh, this is the real Derek Boer reporting over here. And just a quick refresher on how home insurance works and how roof coverage has applied historically. A homeowner's policy is going to rebuild the home from scratch in the event of a total loss, regardless of how old it is. And that same concept applies when you've got lesser damage, like damage to the roof, or you've got burst plumbing or a kitchen fire, things like that. So it doesn't matter how old the roof is when it's destroyed by a windstorm or hail or a tree limb splits it in half. Traditionally, the insurance policy would pay to put a brand new roof on this. So everybody crossed their fingers when they had a 25 or 30-year-old roof and that hailstorm was coming through that it would destroy their roof and they'd get a new one paid for by their insurance policy. They would just be subject to their homeowner's policy's deductible. Well, with the weather patterns that we've had here in West Michigan for the past 3 or 4 years, and some relatively unique, or maybe you might call them aggressive practices by roofing companies, certainly not illegal, just going after the rightful work that's out there, but it's really caused some pressure in the insurance world because the claim expense for roofs due to wind and hail, especially older roofs, has been tremendous. It's been crippling insurance companies. So they had to do something. What they've done to try to help manage the cost of home insurance is enact one of two different practices. One would be just using a higher deductible. So I might say I've got a $1,500 deductible for burst plumbing and fire and vandalism. But if I've got a claim for wind or hail, which is typically going to damage the roof, my deductible is going to be a percentage of the coverage on my policies, specifically the coverage on my home.
Sure.
Most times that's going to be 1 or 2, or in some cases 5% of the coverage on the home. So if you've got a $500,000 home, that's the dwelling coverage on the policy, the deductible for wind or hail is going to be somewhere between, $5,000 and $25,000. Make sense?
Makes sense.
Okay. The other thing that they are doing, if they choose not to take that higher deductible for a wind or hail claim, is simply say, we don't put a brand new roof on your home when it's destroyed by wind or hail. If that thing is 25 or 30 years old, it was basically at the end of its useful life. You are going to have to put a new roof on there sometime soon anyway. And the insurance policy simply says, we don't really do anything. There really was no useful life left. So you don't really have a claim for the damage to your roof because it was at the end of its useful life. You didn't lose anything, right? So
Sure.
that's what's referred to on this slide as actual cash value coverage. That says that they don't provide replacement cost coverage, which is what I referenced a few moments ago, meaning they're going to rebuild the home brand new or make the repairs with new materials. Instead, they're going to say, we're going to consider the age of the roof and we're going to pay the claim based on that.
What would you rather have, Derek? And I didn't prep you beforehand, but would you rather have replacement cost coverage with a higher deductible, or would you have rather have actual cash value coverage with a lower deductible? Is there one that's better than the other?
That's a really good question. When I answer that, take a quick look at the participants, Brian, if you will.
Mhm.
So it's going to depend, right? If my roof is only 10 years old, maybe I don't really care that much about having actual cash value coverage because I'm still going to get a pretty decent payment if my roof is destroyed by wind or hail. Because if it's a 30-year shingle, I lost 2/3 of the expected life of that shingle. So my claim payment is pretty decent. If it's at the very end, then I really don't want actual cash value coverage because I really don't have any value there. Now, if you have a homeowner's policy that's got $1.5 million of dwelling coverage on it, and you're going to have a 2% deductible for wind or hail, that's a $30,000 claim. I don't know if I love that. So even though in that case it might still have replacement cost coverage, if I'm coughing up 30 grand to replace my roof, I might rather have that lower deductible of maybe, $1,000 and have actual cash value coverage because the age of my shingles and that lower deductible is still going to result in a larger claim payment. So it really depends on the specifics of the policy as well as the dwelling coverage and the age of the roof.
Sure. So whichever way you slice it, really the main point is that homeowners have more skin in the game when it comes to the roof, right? The honeymoon period is basically over. It was great while it lasted. Now there are some insurance companies that haven't made a change yet. They still have the old school style of roofing coverage, and that's great. That's as favorable as it gets. We're likely going to see that change in the next year or two simply because they have to just to keep pace with the industry. So this doesn't necessarily apply to every policy out there, but it is what's happening and what you're seeing occur in the home insurance world today. Next, covered or not covered, Derek. Just quickly here, gray area claims we say are going to be especially gray. One reason for that is because the insurance industry has not been profitable for several years, which means that things tighten up, right? Underwriting gets tighter, right? Approving a new policy gets a little bit more challenging. They might ask a few more questions. They might require a few more things from the homeowner, but then you're also going to see things tighten up on the claim side, where some of the gray area claims that maybe were just paid in the past to get it over with and move on might get a little bit more attention or might not be paid or harder to get paid given the state of the insurance industry. As things have materialized, as they've matured and slowed down a bit from some of the bleeding, we are thinking things will open back up a bit again, and we might not see such a challenge on some of the gray area claims. But what we suggest to clients and to anybody really is to call your insurance agent. If you think you have something that you should be filing as a claim, call your insurance agent, let them know exactly how it happened, they can help you position that in the most favorable way possible, right? They can't approve the claim for you. Of course, that's going to be done by the claims team, but they can help talk you through what coverage is there, what deductible might apply, how much would you probably net on this claim? Would there be any impact on the insurance costs in the future? And then you can decide, hey, how are we going to position this and how do we want to get this claim filed so that it can work out in the best manner possible? Now, to go along with that, some claims are going to be denied. There are some things that just are never covered or maybe shouldn't be covered, but maybe could be on a Hail Mary. We have to sometimes encourage clients to file claims that should be filed, right? There are certain cases where, hey, this is a long shot, but there's enough money on the table that we should file this claim. Get a claims opinion from the professionals and see if there's any chance this could be covered. Because if it is, we're talking big time dollars. And you have to just accept that, hey, some claims are going to be denied and probably rightfully so. But if it does get paid, it's a huge win. So we say don't be afraid of a denied claim. That's not a nasty mark on the record. I mean, sure, you don't want 5 denied claims racking up because insurance companies will see that data. But sometimes you have to be willing to submit the claim, say, hey, we're going to make sure this isn't going to be covered because we don't want to miss out on the opportunity to make a reasonable claim here. So talk with your insurance agent, get their opinion, position things as best as you can. And then if it's in that gray area, file the claim and see what happens, right?
Brian, why would you want to talk to your insurance agent before just calling the insurance company and spewing all of the facts at them, or at least the facts that you think might be relevant or applicable?
A couple things. It's helpful to know what coverage you're talking about, what coverage should be in the ballgame here, and then also the verbiage that you're going to use when you're describing that claim, right? I mean, how often does somebody call and say, "Hey, my basement is flooded"? Well, flooded, if you talk to a claims person and they hear the F word, they're going to immediately stamp the red denied on that claim because flood is not covered by home insurance policies. But your basement didn't flood. You had a burst pipe in your basement, or you had a water backup claim, or you had a leaking hot water tank. That is not a flooded basement. That is a covered claim. So talk with your insurance agent so that you're using the right verbiage and reporting the claim in an appropriate manner.
Perfect.
Liability coverage, Derek. This is an important one and often overlooked because hopefully none of us will ever need our liability coverage, but every year a handful of our clients do. What are we seeing happening with the liability coverage market and what are we expecting here going forward?
Yeah, there's a lot of uncertainty about it. You have a note here that most insurance companies are back in the game when it comes to auto and home insurance, and they stepped back for a few years after the pandemic because pricing was really hard to get correct, and the state of Michigan made it a little bit challenging to modify policies and pricing based on what's going on in the market. But for the most case, insurance companies are now freely offering auto and home insurance to consumers, which is great. It produces some more competition, puts some availability out there and options for Michiganders, which is great. They have not done that from an umbrella perspective. So umbrella insurance, as a reminder, is your liability coverage that's going to protect you from a really bad thing that happened in the accompanying lawsuit. So you kill someone in an auto accident, or somebody slips and falls on your driveway and bangs their head and they've got internal bleeding, or you've got a dog that attacked a neighbor's child. Those things where you're going to get that lawsuit paper in the mail, you're going to rely on the liability coverage on your auto or your homeowner's policy first. But in most cases, that is going to max out at 500 grand or maybe $1 million. The umbrella provides more coverage on top of that. So that's really what we're talking about when we're saying liability coverage is the underlying piece on the auto and the home plus the umbrella that goes over top of that for the really bad things that can happen.
Sure.
Umbrella insurance has gotten more challenging because the landscape here in Michigan, from a legislative perspective, has been evolving over the past few years. Anybody that's in West Michigan has probably noticed over the last couple of years that we're seeing more billboards. You saw the fall law one over the holiday season. You've seen some of those ones about the Grinch was somebody I think was getting sued on that other one, and they had Santa playing some other weird role. But we never used to see that here in West Michigan, and we're seeing a lot of advertising for personal injury. And that's because the landscape has changed drastically. There are different courts interpreting things differently, and there's been some rulings that have made insurance companies really hesitant about how much coverage they want to provide and what type of coverage they want that to be.
Yeah, yeah, very helpful. So here, what we say is the takeaway on the umbrella insurance coverage. Yes, it's a touch more expensive than it has been in the past, but it's more important than ever, right? As the insurance industry would do, if you really need it, it's going to be expensive. That's on a relative basis, right? Most umbrella policies are still 200 or 300 bucks a year, but don't let that policy cancel, especially if it's got 3, 4, or $5 million of coverage on it. That's a really challenging policy to replace in today's insurance market. So put it on auto pay. Make sure
You can
that thing
ask
gets
us to
paid.
get you can ask us to get you a replacement one, but we are going to groan and whine and complain because trying to shove those things through underwriting right now is almost impossible. They want to look at your life with a magnifying glass, and getting that policy implemented these days is nothing like it was 5 years ago. So if you've got that policy, keep that thing in place because if something happens and you have to reinstitute it, it's really, really hard to do that. Brian,
Absolutely.
sorry I interrupted you there and just took over, but that's what I do as the younger brother. I never really got the attention I deserved growing up. What the heck is nuclear judgments? I read my insurance policies and nuclear war, I feel like, was excluded. So what the heck is a nuclear judgment? Why is that listed here?
Yeah, nuclear judgments. I think it's kind of corny, but insurance companies love to talk about it, and they blame the landscape in the judicial system for what's happening with the liability coverage. And a nuclear judgment is simply a judgment that is so obscene and so huge they consider it to be nuclear. You're talking about things that maybe were settled for 200 or 300 grand, 5 to 10 years ago, and they're being settled for 3 or 4 or 5 million today. They're calling that a nuclear judgment because it is so significant and so exorbitant compared to what that settlement or what that injury was typically worth in the past that it is just changing that landscape and completely blowing up how insurance companies are pricing that liability coverage.
And the insurance company prices that liability coverage based on what they've seen historically. So they think there's this much likelihood of this type of thing occurring, and so we have to price it based on this and the potential payout that would occur. But oh my gosh, we just had a settlement at $8 million that we traditionally have seen settle for 80 grand. And now, oh my gosh, the nuclear piece is not just this judgment, but our financials for this year have gone nuclear because we're coughing out a lot of money for a policy that we charged 200 or 300 bucks for, we being the insurance company. So great example, Brian. Thanks for sharing that.
Yeah, absolutely. Keeping it moving here, automation and technology, right? No one is surprised to hear that the insurance industry is, of course, embracing automation and technology. The industry, of course, was built on data analytics, right? And as things are getting more analytical, you're finding better and better computing power, better predictive modeling. It, of course, is having a huge impact here in the insurance field. One of the things that we're also seeing, though, is that insurance companies are expanding how they're using technology, including artificial intelligence, of course. Most people would be surprised to hear that 99% of all homes in the continental US have photographs from within 12 months from low-flying drones. 99%. That means yours and mine and Derek's and almost all of our clients. There are photos on file that insurance companies pay for, right? It's a third party that flies the drones, takes all the photographs. They're high def. We've seen them. You can count the shingles on your roof. That is publicly available,
There's
and
got to be
insurance
an
companies buy
attorney
that.
on this call that's thinking about this class action invasion of privacy lawsuit going on here or something. It,
Absolutely,
but
absolutely. But they
it's
do that.
true though. Yeah, it
They
is.
do that. And they'll send memos to the insurance agents here and say, hey, looks like there's an old trailer broken down in the front yard. What is that? And we want that out of there. Or, hey, the barn looks like it might be a little bit shoddy there. Can we get some better photos of the barn? They're using that for underwriting decisions, which means that those of us that own homes or own property, we've got to make sure that we're keeping things up to speed, that it looks decent, especially from overhead, because that's where these photographs are being
And
taken from.
Brian, some of those insurance companies and even one or two that we work with, when you first try to quote a new homeowner's policy, a lot of times they don't even let you into step two in the software because they have already pulled their aerial image and they've seen large tree limbs overhanging the roof. And they'll say, We don't even want to mess with
No,
it.
thank you.
It's not like sure, we'd love to write this, just make sure that the homeowner trims some of those limbs. It's no, we don't even want to entertain this. So it's very, very important that property owners are maintaining the home and the space around the home if they want to make sure that they don't have to jump through hoops when potentially moving insurance companies or getting that, midterm inspection that's done to ensure that the policy and the home are still appropriate for the insurance company.
Absolutely. And one thing that we are really on board with is they're using AI and other technology to identify patterns that can help them reduce insurance fraud. And at the end of the day, statistics would say that 30% of what we all pay in our insurance premiums is due to insurance fraud. Whether it's hard fraud and people are making the type of claims that you see in the news, that doesn't happen that often. It's typically what they call soft fraud, where things are being blown up a bit more than they should. Things aren't being done preventively. You're not protecting your property, right? The hailstorm's going to roll through. You don't pull the vehicles into the garage. Things like that, that they really want to try to reduce what the cost of the insurance fraud is to all of us as consumers. So the better that predictive modeling can be, the less we'll all be paying toward insurance fraud, which of course would be welcome to all of us.
Well, pulling the vehicles into the garage and not doing that is now insurance fraud. I'm starting to feel a little bit guilty over here.
You're just
But
lazy.
okay,
Uh,
I'm thinking insurance fraud, meaning I forgot to insure my wife's ring. She lost it, wasn't covered. What did I do? Well, I added a ring to my insurance policy and she lost it again. And then I made a claim for the second time she lost it, right?
that would be
That's really
hard
the
fraud.
that's really the
Yes,
hard fraud that we see. The soft is the
absolutely.
I got hit while parked, and when I took it into the body shop, I said, "Hey, I also have this ding on the other side. Could you write up the estimate as if maybe, that vehicle kind of wrapped around or it had a hitch that would have hit over here?" Okay, all right. Soft, yes, but still something that the industry really struggles with.
Sure, absolutely. Also, you're going to use technology, of course, to fill the employment gap, right? You don't just see that in the insurance industry. You see that in almost every industry today.
Employment gap? You
I
mean
know,
everybody
right?
doesn't want to go into the insurance field and be an insurance agent?
Hard to imagine that they don't, but they don't. So there's a big issue in the insurance industry today with attracting young talent and attracting the employment opportunities that are necessary to replace, of course, the retiring insurance experts, and then also the additional workload that comes with what you're seeing in the industry today. So another piece here that Derek might touch on, but you are seeing insurance companies do much more predictive modeling with all of the additional resources and technology. Whereas historically, insurance was based on what has happened in the past, and then they're now much better at looking at what they expect to happen in the future. So they call that predictive modeling, meaning, hey, it might not have happened yet, but all patterns would show that that's likely going to happen in the next couple of years, and insurance is going to reflect that in the premiums.
Yeah, Brian, just to touch on that a little bit here, if you look at Gemini or any of the other AI tools and you say, what can you find about me online? Look at LinkedIn, social media profiles, Google, news reports, all that stuff. They might find a lot. And what insurance companies are going to do in the future is have some sort of social profile rating for somebody. Are they an 85-year-old that sits in their condo and watches bingo all day long? Or are they someone that's doing business happy hours and traveling all over the state and doing the golf weekends and hosting parties and just a very active person living that life? Well, those are two very different types of risks to the insurance company, even though they might both have clean driving records, good credit scores, and good claims history. Well, they're two totally different people that historically insurance companies have not been able to capture just based on the past data. Now, if they're looking at what that type of person and that lifestyle will result in from a claims expense perspective in the future, they can price that more appropriately. It's hard to wrap your mind around because you can't really explain it very well, but it's something that's probably going to be prevalent within the next 5 years, if not even quicker.
Sure, sure. Well, I like bingo, and so I'm happy to sit at home and watch bingo all day long and watch my insurance costs take a dip.
Hey, there are some people that'll do anything to reduce their insurance costs, even if it's sitting at home playing bingo or watching bingo.
You get it. So now Rates will be flat here, Derek. When we're talking about expectations for insurance rates in 2026, are they really going to be flat? No. Are they going to be down a touch? No, probably not, but some might. Uh, what are we seeing from the auto insurance side to the home insurance side? What's the difference and kind of what's the expectation as we're
Yeah.
rolling into 2026?
If you've had three DUIs in the past 5 years and those have all fallen off, your rates are going to go down just a touch. So, really good news there. Now, from a general perspective, what we're seeing is policies renewing somewhere within the down 2% to up 7%. And that's very general. There are some cases where the claims history is going to impact that, or there's been a change to the credit profile, or somebody's moving to a different zip code, et cetera, et cetera. But in general, we've moved out of that 15, 25, 35% or so increase year after year, like we've seen after the pandemic, and into more of a stable place where I think people can finally plan for their insurance costs going forward, which has been almost impossible in the past.
Sure, sure. Very helpful. Yeah, much of what had to be done. We talked about the roof coverage. We've talked about the umbrella policies, higher deductibles being mandated, right? All of those were intended and implemented to help manage insurance costs going forward. And we're finally seeing that, right? It took several years to get here, but it's helpful to be in that position. And there's competition in the insurance industry again, and that's healthy for consumers, of course, because it keeps things in check from a rate standpoint. So one thing that we want to point out here is, over the past several years, it's been tempting to maybe cut some corners on the coverage or maybe water things down a little bit, right? Chose PLPD coverage, but maybe should have had full coverage, or maybe I chose a lesser amount for my medical coverage. Maybe I didn't report that I added a $150,000 addition to my home because I didn't want to pay any more for my coverage. Now's a good time to make sure that things are up to speed, right? We're seeing rates stabilize. It's a good opportunity to look back and say, hey, did I make any coverage choices that I wasn't totally confident in, that I was just doing temporarily to manage costs? And if that was the case, hey, maybe now's the time to revisit those coverages and get them back to where you want to be as you're seeing insurance rates start to stabilize. Finally, Derek, consolidation will continue. What on earth does that mean? If I am not living and breathing in the insurance world, what's happening with insurance agencies and what's the impact to the consumer?
Yeah, well, you've seen it a lot in West Michigan. We've got a very, very, very large, not just national, but global company that you've seen name some of the sports arenas here. You've seen them name an NFL football field. You've seen them all over the news. And that's great. It's been great for West Michigan to have them here. But their model is to buy agencies and roll them all up into one. And in that one, they've got very set and strict procedures. They've got a service center. They've got all of their calls, monitored, and they're going to be tracked from a timing perspective. And they're looking to make sure that they're profiting from their investment in that agency. And that's not unique to that one company. That's happening everywhere in the entire country. Part of that is you get rid of the advisors and the account managers and the people that, have had a relationship with the community members and understand their insurance needs and the uniqueness of that certain subset of Michigan. But you also lose that, service and then the guidance and the advice as well, because you're just all rolling up under that one conglomerate that is following some pretty generalized practices. So
Sure.
it's not necessarily good or bad. It's just moving the insurance world into a little bit of a different place when it comes to the type of service that clients can really expect from the insurance agent that they're working with.
For sure. Yep. You've seen the name changes. You see things being rolled up. You see calls being routed somewhere else, right? We say, hey, it's just going to be fewer locally owned insurance agencies. Good or bad, that's for the consumers to decide, but certainly less personalization from a service standpoint. More things are going to be through a 1-800 call center. And then you get a lot of digital agencies or agencies that don't have a physical office or a physical location in that area. Again, not that one is right or wrong, but you're seeing that happen because there's incentives for the big players to do that, and they're taking advantage of it which who can blame them for that? So
And just to give a little insight into that, Brian, we're pretty transparent with our clients and how all of this works. So what what you would do as an insurance agency is you would say, okay, if I can quadruple the size of my book of business, I can probably negotiate just a little bit better terms with the insurance companies that I'm partnering with because I'm handling more of their book of business. I'm doing more things for them. I've got more leverage, et cetera, et cetera. So
yep.
what happens is this small insurance company that's getting paid a certain percentage on the book of business that they're handling, if they all of a sudden are, 100 times bigger because 100 of them got together and combined into one, they're probably getting 20 to 30% more per dollar of book volume that they're handling because of the negotiating power and then the size of the book that they have with the insurance companies. So it's a really weird thing because the insurance companies all tell you that they want to be, family values. They want to be small, Main Street type of insurance companies, and they love rural and they love the community. Yet their compensation structure is big conglomerate, roll everything up under one gigantic mega agency. So very, very strange. Those two don't really go together, but that's why it's happening.
They don't. But here we are. So, Boer Insurance Group, not going anywhere. You're probably aware, Derek and Brian here have a long time to pay off our father for the agency. So, we are here for the long haul. No consolidation in our future. In case you woke up, and then I want to hit on a couple of questions that have rung in. What should we be doing? Right? We're spewing a lot of information, sharing some expectations, but what's actionable? What should we be actually doing in 2026? Number one, understand how your roof is covered. Like Derek said, right? Is it replacement cost coverage? That's what you want. Or is it actual cash value coverage? That's the depreciated coverage. And then what's the deductible that would apply if you need to make a claim? Call your insurance. Speaking of claims, call your insurance agent before filing a claim, right? Have your agent help you understand what coverage is in place or might be on the table for this claim, and then position that claim in the best way that you can. Number three, review your coverage, right? Do you have the coverage that you want and that you should have today? Did you make any temporary coverage changes or reductions? And are those still appropriate, right? And then finally, work with a local agency. Obviously, we own one. We believe in that. It's not right for everybody, and we understand that, but we think it is for most. Personalized service, a local understanding of the risks, and then the communication style, right? We pride ourselves on communication at Boer Insurance Group. It could always be better, certainly, but we think it's a competitive advantage of ours, especially in an industry where that bar is very, very low.
I
Uh,
don't pride myself on my communication. I'm kind of a rambler, as you saw me talk in circles a few times during this.
that's fair.
But the team itself prides itself on our style of communication.
You email very well, Derek. You email
I
well.
do.
That
I
counts for
do.
communication also.
Yeah,
Uh,
thanks.
now, before we wrap this thing up here, I have a couple of questions that rang in. Derek, the first one that came in, I'll kick this over to you. How do I know what amount of umbrella coverage I should have?
Oh, I hate that one. It's so
I
good.
know. Here's your chance. Yep,
Yeah.
you get 20
hmm
seconds to answer.
Okay. 20 seconds to answer. Google will say that it should equal your net worth plus your future income that you'll earn throughout the rest of your career. That's impossible. For a lot of people, that's going to be 7, 8, 10, $20 million. It's really hard to get that amount of umbrella coverage, and it's very costly to do that. Um, when we talk to attorneys, a lot of times they will say that it's very rare for $3 million to not be enough to cover a lawsuit. If you think about it, if you can hand another family $3 million to, right the wrong that you did, whether it was an injury or death or who knows what, that's probably going to be life-changing for them. And they're probably going to take that and go away and not try to ruin your life by taking the equity in your home, your investment accounts, your retirement accounts, your future income, et cetera, all things that a judge can take from you in a lawsuit if you don't have enough insurance for it. But we've been told that $3 million covers 99% of lawsuits. If you have $10 million in the bank, you want to cover as many as possible because if that entire lawsuit isn't covered by the umbrella insurance, that other party is going to find out that you've got all those assets, and they're going to know that it's worth paying the extra legal fees to continue to pursue you because the money is there, right? It's like
Okay,
digging for
there you
gold.
go.
Okay, darn
All
it.
right,
All right,
three
all right.
minutes. Okay,
Okay,
you were 2 minutes and 40 over, but that was a
I
great
told
answer.
you, rambling.
Question number two, uh, kind of summarizing here, and she says unrelated to the workshop content, but just question, student goes away for school, or child is away for school as a student. Does their insurance plan still apply?
Oh man, have you seen the stuff that's going on the east side? That article in the Free Press?
I have seen that. Yes.
Yeah, yeah, that's a big deal right now. So when a student goes away to school, assuming that they are still using your address on their driver's license and they still have a a room within your home, and they're probably coming back over the summer, it looks like your home is their permanent residence. They're still going to be considered part of your household and therefore covered by your auto insurance policy. Same way they would be if they were just living in your house 365 days a year. The challenge is as soon as they graduate, if they don't move home, they're not covered. They're no longer a student the day that they graduate. And if they don't move home to you, they're not covered by your policy.
Yep.
And if you want to get nervous about children being covered by your policy, take a look at what's going on the east side of the state. We don't have carriers that are going to do that, but there are some out there that are going to get really, really particular about what disclosures you made on your application.
Very good. Good answer. Another one, Derek, going back to the umbrella policy. If I have 1 million in coverage on my umbrella today and I was intending to increase it to 5 million, will that no longer be an option to do easily?
I'm hoping that's one of your clients and not mine. It depends on the insurance company. Eh, I'd say there's a 75% chance that the insurance company will offer the 5 million. I would say there's a 25% chance that they're going to limit it to 2. So they're going to look at things like driving record and not just violations and at-fault accidents. I'm working with somebody trying to get 10 million, and the insurance company only approved 5 because they have some comprehensive claims. They hit a
Hmm.
deer, and then this one's a collision, but they got hit while parked. So nothing that they caused, nothing like that. That resulted in the insurance company deciding they only wanted to offer 5 million instead of 10. Figure that out. So
Interesting.
those are the types of things that we're going through. It's just really, really weird. And yeah, there's a laundry list of things they're going to ask. So just be prepared.
Yeah.
Be
Yeah.
prepared for it.
Yeah, and it's subjective underwriting. There's nothing that mandates that insurance companies. There are some laws that regulate the offering of auto insurance because, of course, the state requires auto insurance. Most of those do not apply to home insurance or to umbrella insurance, so it's a little bit more like the Wild Wild West. It's very subjective on the underwriting side of things.
Yep.
And then one more, Derek. Also, great question here. Have seen this on occasion. Why did my insurance company pay more to replace my roof than I would have paid without insurance?
That's a great question.
But it happens. Uh,
It does
it-
happen. We see this with some re interior restoration as well when doing cabinetry and flooring and things like that. Yeah, they take into account uh, a bunch of data. They plug that all into this system called Exactimate, and that is their Bible. So that looks at the square footage of the space that needs to be restored, whether it's the section of the roof or the floor that's in the kitchen. So they're measuring that. They take a piece of that material. In a lot of cases, they ship it down to this facility called ITEL, ITEL in Florida. ITEL examines that and determines exactly what makes up that piece of material. So they'll know the type of wood, the type of shingle, the type of wood that was used for the cabinetry, et cetera, and they have all of their pricing set. So they know exactly what the material cost should be, what the labor cost should be within your zip code. And then they're going to add in 2 things, overhead and profit. So that roofing company or the restoration company is going to be able to pay for their insurance and their taxes and their fees and all that fun stuff. That would be the overhead. And then the profit is profit for doing the job. So a lot of times it's going to be a little bit higher than what would actually be needed, but they're just going to always follow this software called Exactimate because that way it takes out any sort of subjectivity and they always know exactly what the insurance price would be.
and the insurance company doesn't care who you work with on those repairs, right? The insurance policy is designed to pay what they call the market value of the work that needs to be performed. So their job is to determine what that market value is. What does it cost to do this work? We don't want to overpay, we don't want to underpay, but they're going to determine that amount. And if you can get the work done for less, fantastic. And sometimes clients want to work with a very high-end uh, builder or high-end restoration company. They might say, we're not going to pay that full thing. That's not market value. If you want to, that's great. But they are intending to pay the market value of the work that needs to be done. And you
of
will see some variance in that.
someone that has the qualifications to do that work, not the
True.
qualifications times 100 to do the work. They're not going to pay a brain surgeon to clip your toenails, right? They're going to say this person should be charging this amount because that's the certification that they should have.
Right, right. I just usually have you clip my toenails. I don't need a brain surgeon for that. So,
Well, you got one doing it,
uh,
turns out.
oh, geez. All right. Well, that wraps up the questions that we had. So thank you for the great questions. Thanks for being with us today. Derek, Brian, our entire team here at
All
Boer
of our
Insurance Group,
Derek's.
all of our Derek's, we appreciate you being here. We appreciate you working with us. Thanks for your trust, your friendship, your guidance, the whole thing that we get to do this with you. Our industry is challenging and it changes quickly, but we're here because we like working with you. So thank you for being here with us. If you have questions, follow-up things, all of us here at our team are happy to help and make sure that we've got things buttoned up where they should be. So thank you so much for joining us. Have a great rest of the week. Thank you for your content, Derek.
Yeah, thanks, Brian. Thanks,
All
everybody.
right.